Mortgage rates at one-year highs mean Canadian homeowners eyeing a refinance should compare fixed options this week before costs climb further. This is Modern Investing Techniques, episode 125. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,490, up 0.7%. The Nasdaq Composite finished at 25,374, up 1%. The TSX Composite ended at 35,226, down 0.8%. 84% of S&P 500 companies have beaten earnings estimates so far this season, which keeps the broader backdrop constructive even while Canadian and U.S. markets moved in opposite directions. Joint U.S.-Japan intervention to support the yen stays active and adds FX volatility that any Canadian holding U.S. assets needs to watch. Both the Bank of Canada and the Fed remain in holding patterns, with the next decision still weeks away. 15-year fixed mortgage rates reached a one-year high this week, which raises refinancing costs directly for Canadian borrowers. Remember, we covered DAL about 23 days ago on record revenue and margin resilience. It closed down 1.41%, underscoring that even strong fundamentals can be overridden by sector rotation. With rates moving and volatility in FX, let us look at a strategy Canadian investors are using inside tax-advantaged accounts to generate income. Covered call ETFs sell call options against equity holdings to generate extra income while retaining ownership of the underlying shares. Two such vehicles now yield above 25%, which makes the income look attractive in a sideways or mildly bullish market. The sold calls cap upside participation, and the underlying holdings can still decline sharply if sector rotation accelerates. Canadian investors can place this inside a TFSA by choosing a covered call ETF that tracks broad US or Canadian indices. They then monitor the call strike relative to the current price to see how much upside is being traded away. The approach has historically performed best in low volatility regimes where collected premiums exceed modest drawdowns. It tends to lag in strong trending bull markets once the calls are exercised away. A same-day volume check above the 20-day average remains essential before treating any rebound in these ETFs as confirmed. The quiet change in risk comes from the fact that elevated yields now come with greater potential for the underlying assets to fall outside the covered range during sector rotation. Investors should therefore pair any allocation with a review of the ETF's holdings concentration and recent drawdown history before committing capital. Before placing any orders in these vehicles, it is worth understanding exactly how fills happen on volatile days. Imagine you place a market order for a U.S. equity ETF right after the open on a day when mortgage rate data surprises the market. Your order fills at $48.72, even though the last quoted price on your screen was $48.55. The bid-ask spread widened from 3 cents to 14 cents within the first 90 seconds as liquidity providers stepped back. Your market order crossed the wider ask while quoted depth on the bid dropped from 12,000 shares to fewer than 3,000. Professionals always check the depth of book and recent trade prints before sending a market order on news days. Retail investors who skip this step routinely pay 20 to 40 basis points more than necessary. The concrete misconception to avoid is assuming your brokerage's best execution guarantee eliminates slippage on fast-moving names. Speaking of disciplined entry points, here is what we are watching this week in the practice portfolio. This is a simulated trade for educational purposes only. No real money is involved. Today's focus is monitoring race on the NYSE in the consumer sector. Ferrari reported a second quarter earnings miss on both top and bottom lines. We are waiting for post-earnings stabilization above support rather than jumping in immediately. The defined trigger conditions are an RSI on the 14-day reading moving below 45, followed by a close above the 20-day moving average on volume at or above the 20-day average. The maximum acceptable loss remains 6% if the setup breaks below the most recent swing low. The target range sits at 3 to 6% over the 5-day window if support holds. Confidence sits at low because this remains a single-factor setup with no confirming volume or sector rotation yet. This watchlist approach demonstrates how to define precise trigger conditions before committing capital, turning an earnings miss into structured observation rather than an emotional reaction. While we wait for those levels, a couple of new tools crossed my desk this week that may help with screening. Options Play begins its Monday macro playbook with 7 fresh ideas generated by an early breakout detector. The Thursday beginner module covers the mechanics of buying calls and puts, which Canadian investors can use to screen for breakout candidates inside a TFSA without commissions on U.S. names. The Monday segment also incorporates market driver analysis and sector-level data that can be cross-referenced with existing holdings. ClearStreet's new platform gives accredited investors pre-IPO access to late-stage names such as Databricks, valued at $188 billion. Minimum tickets are lower than traditional venture channels, and the launch reduces the paperwork barrier that normally keeps individual investors out of private AI infrastructure names. Access requires an account with ClearStreet plus completion of accredited-investor verification. A few quick items before we wrap. More than 4/5 of S&P 500 companies have cleared earnings expectations this season, supporting a constructive backdrop for growth names even as Canadian markets lag. Joint intervention to support the yen remains active and can pressure USD CAD, which widens bid-ask spreads on US-listed holdings for Canadian accounts. The DeFi protocol Aave is evaluating the shutdown of low-use reserves on 6 blockchains including Sonic, Scroll, ZK Sync, Metis, Sonium, and Aptos. Palantir faces downside risk into its second quarter report, highlighting how even high-profile AI names can gap lower on valuation concerns. Open your brokerage platform, pull up the 15-year fixed mortgage rate quote for your province, and compare it to the rate you locked last year. Note the difference in monthly payment on a $400,000 balance. Our simulated portfolio data versus the NASDAQ is currently unavailable, so we will track that comparison once fresh numbers arrive. Before we sign off, here is your quick listener challenge and a fast look back at the week. Mortgage rate pressure on Canadian refinancers stayed front and center all week as 15-year fixed rates hit 1-year highs and refinancing costs climbed. Yen intervention FX volatility continued to affect USD CAD spreads for anyone holding US assets in registered accounts. Covered call ETF yield versus risk trade-offs drew fresh attention as 2 vehicles pushed above 25% while the sold calls caped upside and sector rotation remained a live threat. Before we wrap, tomorrow we will check whether race has triggered any of the defined technical conditions after the earnings miss. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. One more thing, if you liked today's episode, our sister show, the Do Positive Pod, is worth a spot in your feed. Good news in science and tech, plus one concrete action you can take. It's one of the Nara Network's daily briefings, all free at naranetwork.com. Prefer reading? Today's full write-up, sources, and transcript are on the episode blog at naranetwork.com. Same briefing, readable format. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you